Markets just turned around on a weird catalyst we're going to talk about. The dollar just started moving down on it. But all in all, it looks like it could be a good thing for the market. So we're going to take a peek at that real quick. We'll take a peek at the charts just before doing that. And good morning, Max, Greg, and Rocky Mountain Gobblers. Good morning. Welcome, everybody. So we've got the markets actually moving up, right? This top left chart is the SPY. And at 8:30, when this report came out, we started moving up in a big way. And in this chart to the right, we've got the dollar that started sinking in a big way when this came out. So we actually have the story right here. Good morning, Silver. What's up, man? We've got this coming out. Key Fed inflation gauge rises 4.9% from a year ago. Fastest gain since 1983. So this is the PCE, the personal consumption expenditures. And it's the core PCE year over year. You got the chart right here. The report just came out at 4.8% or 4.9%. We were forecast to have an increase of 4.8%. So this 0.1% increase above what we were expecting, I'll pull this back in a second, but that 0.1% increase ended up causing the markets to rise from where they were at the beginning of 8:30 to the highs, almost 1%. So impressive stuff, all things considered. In the dollar, nobody has been wanting the dollar ever since, it seems, right? The dollar's just been sinking. Of course, this hasn't had that large of an impact on gold or any of the metals, but we'll see. We'll see if those start to line up with the rest of the market, right? So good morning, Auto Codes. What's up, man? Overall, this could be worse, right? Although the numbers are rising, it was, 0.1% higher than what we were expecting. And for those of you who don't know, I'll just pull up this, right? The personal consumption expenditures, the PCE, measures consumer spending for a period of time. It's the preferred method by the Federal Reserve to measure inflation. So this is actually important to the Fed. And this is potentially, this is why, in my opinion, it doesn't make too much sense for the markets to be moving up on this, right? In a way, it makes sense, right? People see inflation is high and they want to ditch their cash, right? They don't want to be holding on to cash when inflation is high. And what you would think would happen is people would see this number being very high and they would be worried, well, maybe Jerome is looking at this number too. Maybe Powell wants to raise interest rates higher or faster and get rid of some of this inflation. So that's what I would think a lot of people would be reacting to. But it looks like it's the exact opposite. It looks like people are dumping their cash and buying up stocks, not buying up gold, though. We'll pull up gold. Gold was basically unmoved by this. I mean, you look at 8:30, and we basically just played around the exact same level that we were at. So gold was unaffected, but the markets got a little bit of a boost. Now, until that happened, we were not looking too hot on the markets. If you look over the past 30 days, we'd made our all-time lows, or not our all-time lows, but fairly low lows for this crash at least, down to 420. And we bounced up and we were playing around the 425, 430 area for a while, maybe 440s we got to a couple of times. And we just started sinking. We got down as low as 426. And this was really a saving grace, right? It got us back up above 430. So we're not that far off, I will point out, from the lows of this dip. But we've got some cushion, right? If we start moving down and we move down below 420, then potentially that's when we're going to start seeing some much better buying opportunities. I mean, we've got some good buying opportunities right now. If you look at the smaller market cap stocks, those have been absolutely decimated. An auto code says, Rob, make me first moderator when you need to. You don't have any. That's right, I don't have any. Fortunately, I don't think we've gotten too much trolling in the chat. But, eventually we will certainly need moderators, auto codes, and you will be one of them. And good morning, Manny C. Good morning, Lillian. What's up, guys? Shadow Girl, Adrian, good morning. And Rich M, good morning, man. And Flux Force, good morning. You've been holding up 6.5% in pre-CRBP. Not a bad start. Not bad at all. Not bad at all. So the dollar's moving down. Stocks are moving up. And we've got some really interesting stuff coming out from Elon Musk, actually. We're going to talk a little bit about what Elon Musk has been working on, some of the Tesla bot stuff. I don't know if you guys have heard of that, but if you haven't, you're going to be interested in it. Now, we will come back to the PCE once some more people get in here, but for the next little bit, I did want to talk about a scary thing for the economy, right? A lot of people typically talk about the student loan crisis, right? That's a big headline on a lot of people's minds. oftentimes. So this just came out, right? A CNBC survey finds that 81% of adults with student loans say they've had to delay key life milestones. And we can actually take a look at what those milestones are. But first off, I wanted to just point out that more than 45 million Americans collectively owe over 1.7 trillion in student debt. So an absolutely monumental number, right? A ton of people in a ton of debt. I'm sure they wouldn't be happy if they're on a variable interest rate to see interest rate hikes, right? That would be very bad for them. They've already had to delay a lot of key life milestones that we're about to look at. So over 40% of respondents, here's the milestones they had to delay because of their student debt. 40% had to delay paying off other loans. So they decided to prioritize the student loans, probably because the scary thing about these student loans is you can't declare bankruptcy with them. And I mean, you can declare bankruptcy, but it doesn't actually wipe out the student loan debt. So they've kind of tied it to you, and there's no getting out of it, right? There are people who are getting their Social Security docked because they have student loan debt. And it's a very scary thing, right? That there's this debt that you can take on and you can't escape. And in a way, it makes sense, right? You don't want people just taking out debt and then declaring bankruptcy and screwing out the lenders. But at the same time, I mean, if you make a mistake when you're young and you're taking out all kinds of debt and life just doesn't work out, you could be stuck with hundreds of thousands of dollars worth of debt and no prospects to pay it off, right? It could be a very scary situation, and to have no out for that, it's pretty terrifying for some people, right? When they're taking out all kinds of debt. The second biggest category, though, and this applies more heavily to what we talk about day to day. The second biggest category, the second biggest milestone that these people with student loan debt had to put off was investing money. Now, I think that's absolutely horrible, right? I think that a lot more people should be investing than are, and it's no surprise, right? I mean, when you look at how expensive college is, it is no surprise that people have to put off investing to pay off those student loans. But I think it's, unfortunately, I think it's a big mistake most of the time. And keep in mind, guys, this isn't advice of any kind, but in my opinion, from what I've experienced personally, college maybe is necessary for some professions, right? If you want to learn engineering and you want to get really good at math, there might not be a ton of resources online that help you do that to the extent that you'll need. But for most things, I think that the internet is a great place to turn to. I think there are a ton of resources on YouTube, on Google, on all kinds of places where you can find information that's just as good, if not better, than what they're teaching you in the universities. And here's why. When you're going to a university, you're learning from a professor, right? And that professor is the best that the university could afford, or hopefully close to the best that the university could afford, right? Obviously, the universities are making a bunch of money, and they could probably afford to pay the professors a little bit more, but they're paying them something, and you've got a professor who's hopefully decent at what he does, or she. And it's not necessarily the best professor in the world, but when you have an online professor, they're able to leverage the internet to reach tens of millions of people. And through that process, if thousands of people are doing that and trying to teach lessons, then it actually enables you to find the best of the best online, right? You find the video with the most views. You find whoever is the best at teaching for your specific style. You're not bound to this one professor that the university decided was necessary for you, or a certain course load, right? So I think that a lot of the time, these student loans and this college debt that people take on is potentially a big mistake, right? I think that they're paying out the wazoo, $20K plus a year sometimes to go to these schools, and they're not even getting the best education that they could be. I think that a lot of education, I think that the way of the future is a lot of people are going to get educated online. I've always found that the best place to learn for me was online, not necessarily in a school. But that's just me. The third biggest milestone that was delayed by student loans was saving for retirement, and that kind of probably has a lot of overlap with investing money, right? Typically, you're saving for retirement by investing in a 401k or a retirement account or a Roth IRA, whatever it is. So those probably have a lot of overlap. And another big one was travel. Travel can sometimes be a bit of a waste, I think, if you're going to a really touristy location. Those tend to be really overpriced. I've been to them. I don't plan on going to many more of them. I think that they can be a little bit overpriced. It's a little bit of a ripoff. It's not as fun necessarily as going on a more self-directed vacation, right? Just going to another country and exploring town or whatever. That's just my opinion, though. Some people really like the touristy stuff. And another one, buying a home, right? So when we're looking at all this student debt that we've accrued, when we're looking at the 45 million Americans who owe 1.7 trillion in student debt, we're actually looking at a big hindrance to the economy, and not in the way that people typically think of, what's going to happen if they default on the debt. But we're looking at a situation where the markets could be doing probably significantly better if we had them all investing their money, if we had them all buying homes that could raise home prices, and finding a new job. They could find stuff that they're a little bit better at. Some respondents said that they haven't done that, as well as paying off other loans. Right? We could have their lenders be making a little bit more money. The banks might be making more money too. So all in all, this student loan debt, not a great thing, right? And we've got just one more little thing, just one more little story about the student loan debt. The majority of borrowers say taking on federal student loan debt is not worth it. And that's exactly what I think too, right? I think that if you're taking on a ton of student loan debt, it typically isn't worth it, right? There's a relatively few situations in which I personally think it makes sense to take out these staggering amounts of debt, right? So 54% of student loan borrowers said taking on the debt was not worth it. It was a mistake, and I would agree with that. 44% said taking on the debt was worth it. You got to believe that there's some cognitive dissonance there, right? Some bias, because they took on the debt. Now they've got all this debt, and it would be pretty sad for them. It must be pretty sad for the people who admitted, it was a mistake, to admit that, they made a $30 or $40 or $50,000 mistake. So there's probably a little bit of bias in that survey. Obviously, nobody wants to say, yeah, I messed up taking out all that debt, because it's a big decision, and people don't like to make those kinds of mistakes. But still, the majority of people admitted it. So interesting stuff on the student loan debt. Potential crisis that we're going to be looking at sometime. If interest rates go up too high, then it could be bad. So the markets overall, once again, it looks like we've gotten some more people in the stream. We're going to talk about the PCE that just came out. So the markets are actually looking a little bit better, a little bit brighter after this news came out. Key Fed inflation gauge rises 4.9% from a year ago, fastest gain since 1983. So all is looking good for inflation. Right? And that typically means, if all's looking good for inflation, it typically means not good for the dollar, right? So this is the, what was the actual term? The personal consumption expenditure index. Basically, it just measures some prices and whatnot. And it's the Fed's key gauge right here. You see, it's the Fed's preferred method by the Federal Reserve to measure inflation. So Jerome is looking at this, right? And you would think that people would maybe extrapolate and say, well, if this measure is higher, then maybe Powell's going to be raising rates more. Maybe he's going to be fighting inflation a little bit harder. It looks like people aren't taking that viewpoint, right? People are taking the viewpoint of inflation is higher. It looks like I don't want to hold dollars. I'd rather hold stocks, right? And we're seeing at 8:30 when this report came out, the stocks started moving up, right? The S&P started moving up. We got back above a key support level at $430 for the SPY. And at 8:30 also, the dollar, which we've got in the right chart right here, started sinking. Now it's starting to recover a little bit, but we'll see what happens with it. It has been pretty volatile since that report. So we'll see what happens with the dollar. But all in all, it was only 0.1% above what was forecast. So not the most insane report out there. But Zach Taylor is in the chat, so now we can talk about this. Zach Taylor pointed out to me yesterday, crazy story. Biden administration to regulate Bitcoin as a matter of national security. So it looks like Biden doesn't like Bitcoin or cryptos that much. He's worried about the security of the nation. And it looks like he's going to be putting in place pretty soon an executive order in the coming weeks to task federal agencies with assessing the risks and opportunities that Bitcoin and cryptocurrencies pose. And this should also, it shouldn't just affect Bitcoin and cryptocurrencies, it'll affect stablecoins and NFTs as well. So this could be quite bad for all of these things, right? If depending on what the regulations are, people really might not like them. A lot of the lure of Bitcoin and cryptos is that they're decentralized, right? They don't have a huge organization like the government in control of them. At least a lot of them don't. Some do, but a lot of them don't. So that might be a big deterrent from investing in them, right? Because that was a big lure in the first place, depending on what the regulations are. Now, obviously, there's the counter argument that some people, might bring up, and that is maybe cryptos will start to perform a little bit better. Maybe as they get regulated a little bit more, maybe we'll start to see more institutions believing in them or investing in them now that they can have a little bit more sway over what happens, potentially regulation-wise. Institutions might think, well, this is going to bring some stability and confidence to the crypto markets. Maybe that'll happen, but my guess is the regulation probably won't be great for the price of crypto, but we'll see what happens, right? Cryptos, they have been falling for the past while. If you look at Bitcoin, it's been a rough past 3 months to be in Bitcoin. From the highs of 68,000 to the lows of 33, it's lost more than 50% of its value in the span of less than 3 months. So Bitcoin's been hurting, as have all cryptos. I think they've lost about half their market cap total. So cryptos are obviously hurting quite a bit. And maybe these regulations, maybe they'll help out. Who knows? But my guess would be no. So we'll see what happens with it, right? That's just a guess. You can never say what's actually going to happen because we don't actually know what the exact regulations that they're putting in place are. But typically, I'm not a big fan of government regulation. That's just my opinion, though. Everyone has their own thoughts on it. Now, I will point out that a lot of these stocks are getting to very low levels again, right? Not just the lows that we saw for a couple of minutes about a week ago when we were at our all-time lows for this dip, right? Sundial got down to 40 cents, and there's actually an interesting chart that I wanted to pull up for you guys regarding Sundial, and that is the short interest chart. And you can see that we've actually gotten a significantly lower short interest since we last looked at it, right? We're down to 259 million shares short, down from around 288 million where we were on Tuesday. Then on Wednesday, we dipped quite a bit. So part of that might have been, obviously shorts are covering. They see these stocks getting pushed down to super low levels. And that could obviously have been a big influence on, if 30 million short shares are covering, a big influence on why Sundial was able to move up 25% from lows of 40 cents to highs of above 50 cents. So potentially, part of this positive price action that we saw was some shorts covering. Now it looks like Sundial's moving back down, but we don't have too many more shorts coming in, right? What I really want to look for when I want to see the end of this this big bear market that we're in is I want to see shorts starting to cover, right? I want to see shorts, the institutions that are shorting, entering long positions. I think that, they have a lot of sway over the market, these big institutions, and, they've kind of proven, they've flexed their muscles, and they've proven that it's very tough, very, very tough for retail to take control away from them. It's happened every now and then. We saw it with AMC, but they quickly regained control of that situation. I mean, look at AMC. We are making all-time lows on this downtrend with AMC. I mean, it's almost like they're hammering AMC to make a point, right? They're almost trying to say, look at what happens when you go against us. We'll push this thing down. How far down is it? Let's see how far down it is. So from the highs to the lows, AMC is down 80%, 79% maybe. So, the institutions, maybe that's them flexing their muscles, just showing that they're in control and that stocks aren't going to go up until they're ready to buy into their longs. So, obviously, a lot of shorts covering and buying long positions would, in and of itself, cause the market to start moving up. But that might be when they're more keen on starting to flow capital into buying instead of flowing capital into more short positions, right? And that's what would help create a sustained growth cycle. So at least for these smaller market cap stocks, right? Obviously, they've never stopped pouring money into the big market caps like Apple and Microsoft. I mean, Apple actually just had earnings. And although they have been on little dips, the Apple earnings were actually pretty good from what I've heard, right? I didn't listen to the call live, but it looks like we did bounce up pretty significantly on the earnings call. So all things considered, I mean, let's see how much we were up. So when the earnings came out, we moved up about from the lows to the highs, about 5.7% on Apple, which I believe at this time is the biggest publicly traded company in the world. So pretty cool, pretty cool. Good earnings call for Apple. And Vivi asks, could you look into coin stock? Yeah, Coinbase. I do hold some Coinbase, so I'm happy to look at it. It's been falling along with everything else. Now, the thing about Coinbase is it's obviously going to do better when cryptos are doing better, because when cryptos are doing good, there's a lot of hype, a lot of people are trading them, and they make money off of the trading of cryptos, right? They don't necessarily hold a ton of cryptos themselves. They've got some, but they don't care if cryptos are going up or down because it affects them directly. They care because it affects them indirectly, right? When we're in a bull market, everybody's excited. Everybody's hopping on their Coinbase account, buying up Bitcoin because it's going to the moon, and they're making more money in these fees. And cryptos, like I said, if we pull up the Bitcoin chart, it's been falling for the past 3 months. So about the same time. I mean, let's see, when was the peak of Bitcoin? At 11,721. And when was the peak of Coinbase? At 11,921. So for as long as cryptos have been falling, Coinbase has been falling. And I think we're going to have to wait until we start to see a little bit more bullishness in the crypto markets before we start to see bullishness in coin. But at these prices, I mean, I'm happy to just keep on buying the dip in the long-term investment account that I've got. The M1 Finance account. For those of you who don't know, I use M1 Finance for the long-term investments, right? And that essentially just allows me to put percentage-based allocations into certain different stocks and certain different sectors, and then just plop money in the account whenever I wish, and it automatically gets distributed and buys up fractional shares of all of those stocks and perfectly allocates it, right, on a percentage basis. So I'm just happy to keep doing that, and Coinbase is one of those stocks, and I feel like I'm getting it cheap at these prices, right? It IPO'd at $380, so it's what, down 50%, just about, down more than that maybe. Let's see, what's it down from 380 down where it's at now? It's down 55%, so it is down quite a bit, quite a ways. Coinbase has fallen. And a lot of it's due to the fact that cryptos haven't been doing too great. If you look at Bitcoin over the past year, we're barely green, right? In fact, in just about a month, if Bitcoin stays at the same price, we'll actually be down, right? Because then we'd be in February, and February 28th, Bitcoin was around 48K. So we have to climb up to 48K, about 11K. We need Bitcoin to go up in price by $11,000 per coin if we want to be at break even for the year in a month from now. So I don't know if we're going to be able to do that, but a lot of the crypto stocks have been suffering a bit because of that. So once again, just to finish this thought, what I'm really going to be looking for to see when we might be at the bottom of this bear market is I want to see a lot of shorts covering their positions, right? That's a somewhat obvious indicator, right? But if you don't have access to Ortex, which gives you these live updates, then you're relying on something like MarketWatch, which is pretty darn delayed by, I believe, a couple of weeks, if I'm not mistaken. So I will pull up a very, very funny Elon Musk tweet. He has a couple of good tweets, and then we've just got something that's interesting in general. So these are pandemic tweets that Elon Musk is putting out, right? So he says, and in the darkness bind them. This is a Lord of the Rings tweet. If you like Lord of the Rings, you're going to love this. You guys know the scene, right? Bilbo's looking at the ring, pandemic emergency powers right here. He's the government. He's looking at it. Why shouldn't I keep it? If you guys know Lord of the Rings, you love it. I love Lord of the Rings. So very funny, very funny. It looks like they'll probably be keeping the ring for themselves. They won't be giving it back to Frodo, who would represent the people in that situation. And then Elon Musk tweets out, if you scare people enough, they will demand removal of freedom. This is the path to tyranny. I think this is very important that he says this because he's absolutely right? So he's definitely right with that. Elon was tweeting out some really good stuff last night. He also tweeted out just an interesting thing. Seems odd that the UN still hasn't released 2020 world death rates. It seems a little odd. I don't know. We'll see. We'll see. Maybe they have a reason why. And this last tweet has nothing to do with the stock market, nothing to do with anything really. It was just an interesting tweet that I saw. And if you guys like Terminator, if you guys like Total Recall or any Arnold Schwarzenegger movie, if you guys are Arnold Schwarzenegger fans, if you ever were into the bodybuilding scene way back when he was doing it and you're a fan of his, you'll be either excited or very disappointed to see this. Coming February 2022, look at this. Arnold is Zeus. So he started out as Hercules, now he's Zeus. Really cool stuff. That just looks like an interesting movie that I'm very willing to watch. So I just wanted to point that out. If anyone was interested, there you go. Arnold is going to be Zeus in the future. So Vivi says like and share the video. That would be much appreciated, guys. Yeah, if you wanna share a like or share the video with a friend, then that would be much appreciated. I would love it. But no pressure. If you're busy, you can't click the like button. Understandable. I don't mind. So the markets, it looks like, have been reacting very well to this news, right? That inflation, the Federal Reserve's preferred method of measuring inflation, the markets seem to be loving that it's coming in hot. It's coming in high. And who's to say why, right? Maybe people are realizing cash doesn't seem too safe, right? That maybe they're realizing there's not much the Fed can do to stave off inflation. Now, obviously, cash seems to be rebounding. The dollar seems to be moving up again. But once again, when this news came out, we did dip fairly significantly. At least it looks fairly significant on the chart, right? We gave up most of the gains from the pre-market, but now it seems we're making them back. And I mean, this is just an insane chart, right? Look at this. The dollar just becoming stronger and stronger. Stronger and stronger. So scary stuff to see the dollar becoming this strong when so many of them have been printed. I mean, you guys have seen the statistic. And I'll pull it up one last time for you guys right here. 80% of all US dollars printed in the last, well, now it would be 24 months just about. So really scary stuff. So Elon tweeted, Canadian truckers rule. Check it out. Did he? Let's pull this up. Let's see what he said. Canadian truckers rule. Look at that. I don't know what Canadian truckers have done. Let's see. What did they do? I'm not sure. Okay, so I'm not sure what Canadian truckers did. I've not been keeping up with that news. Oh well, I missed it. But if anyone knows, feel free to put it in the comments. Let me know what's going on with the truckers. The dollar, yeah, we'll see what happens with the dollar. But what I'm more interested in is seeing what happens with some of my favorite stocks. Now, we looked at AMC. We'll look at it again. Sundial hit 42 cents very briefly before bouncing back off of that. I think that we're going to start seeing some really good buying opportunities at certain prices. Thank you for the Super Chat Sub-Zero. Robinhood is tanking below $10. I know. Look at this thing. I will pull up Robinhood. I was looking at it earlier. The earnings call destroyed them. And this is absolutely crazy. Let me pull up CNBC's main page because I didn't pull up the story originally, but I will pull it up. So I think this is it. Maybe it was somewhere else, but boy oh boy, something I think about Robinhood. Look at this. So we're looking at their 1 year, right? And unfortunately, this low right here is kind of blocking off the earnings call, so you can't see it. But they lost 49 cents per share, right? Now, this is a very basic analysis, right? Because obviously they say other stuff at the earnings calls other than just announcing the earnings per share. And to be honest, I don't keep up with Robinhood too closely, right? It's an interesting one, but it's not where my attention is really dedicated. But it's an interesting pattern to see. Look at this. The market just opened and new lows sub $10 on Robinhood. Now, here's what I'm looking at. I'm looking at Robinhood. They IPO'd at $38. Obviously, it was a great IPO, right? They made highs of 85, and it's just been down since then. But what's interesting is their earnings per share, right? And their price. So their earnings per share, although it's increasing every quarter, their price has been steadily decreasing. And this is a big indicator that we're going to want to start looking for buying opportunities. I mean, we've been seeing buying opportunities the whole way down, I think, and we're getting just to the point where these buying opportunities are getting so juicy because we're in such a fearful environment that it almost doesn't even make sense how cheap some of these things are getting compared to how they're actually improving, right? So obviously, a lot of people do not like Robinhood for reasons that occurred in what was it, 2020, 2021, when they were limiting the order of shares and whatnot. They have payment for order flow, all that. A lot of people don't like Robinhood, but I'm just using them as an example here for a second to explain what's been going on with their earnings and what's been going on with their price. So you can see their earnings. This first earnings call that they had, minus $2.16 per share, and at that time they were valued at $49, just about. Then their next earnings call, it improves a little bit, right? Their earnings become minus $2.06 per share, so it got 10 cents better. And at that time, they're valued at $39 per share, so they've lost about $20 worth of value. Now, their earnings come out at minus 49 cents per share, so they've improved them by about $1.50 per share, and they're valued at $9 per share, so they've lost about $30 worth of value since then. And it's just this kind of thing that indicates, the markets are not making sense right now, right? They're not moving off of the fundamentals. They're moving off of, potentially the macroeconomic environment. People are worried about inflation and whatnot and rate hikes. But, Robinhood's earnings have been steadily getting closer and closer to profitable. And their price has been getting closer and closer to zero. And at a pretty rapid rate, too. From their highs to their lows, let's just see what they've fallen from their peak, although that peak, probably wasn't too justifiable. We'll look from their peak to now, they're down 88%. And that's the same story that we've seen time and time again with a lot of these stocks. They're just getting pushed down. They're getting to prices that are probably way too cheap. And a lot of people are probably going to make big money over the next couple of years, right? If they're buying these stocks over the long term, because they've just been pushed down. And you can see same kind of thing happening. AMC is a bit of a different story, right? It's definitely a different story. That one is probably the hedge funds and the institutions flexing their muscles, showing that they can push this thing down. Short interest, though, it's decreased on Sundial recently, is not decreased on AMC, and AMC just made all-time lows of this dip today, I believe. If we pull out the 180-day chart, I think this should be the all-time low that we just made today, below, almost touching $14 per share. So we'll see what happens. We'll see what happens with these stocks. I think that all of them are getting very cheap. The S&P is falling right now after the opening bell. DWAC is dipping a little bit down to 65. So we'll see what happens with that. Now, Teflon Don says, can we buy stock in Sundial if they get delisted? I'll pull this up. You cannot buy stock in Sundial if it gets delisted, but well, it depends on your brokerage, right? So what happens if I own a stock that gets delisted, at least on Robinhood? If a stock that you own delists, you'll be able to sell it in the market, but you won't be able to purchase additional shares. So if Sundial were to be delisted and you were holding it on a brokerage like Robinhood, you'd still be able to sell. You couldn't buy more, but you could sell. And potentially, if you were holding it on a brokerage like TD Ameritrade, it would become an over-the-counter stock, and then you could continue to buy and sell, right? But I don't think Sundial's getting delisted, right? I agree with AutoCodes. I think they're getting that extension. So hopefully we will see that reflect in the price action, right? It looks like Sundial is beating the market today, up about 1% from close. It was a rough close yesterday. Yesterday wasn't a great day for Sundial. It did get pushed down a little bit, but we are notably greenish today, right? Up 1%, whereas the market is down 0.3%. So all things considered, not the worst case scenario. DWAC down 1.5%. I think we're just going to need to wait to see what happens on February 21st for this one, right? The launch of True Social. I think that could be a good thing. And Teflon Don, thank you very much, man, for the super chat. I think biggest super chat we've gotten on the channel, if I'm not mistaken. Says, thank you, I'm holding then. All right, that's awesome, man. I'm still holding, I've got quite a bit of Sundial. I have quite a bit on Robinhood. I have quite a bit here. I'm still holding. Even if it gets delisted, I still think that when even over-the-counter stocks, I will point out, even over-the-counter stocks like MJNA, we'll pull this up. Watch this. So we'll pull up Sundial in the top chart right here. We'll pull up Sundial at the 1 year, and we'll pull up MJNA at the 1 year, which is an over-the-counter stock, an over-the-counter cannabis stock. It did not, the fact that MJNA was over-the-counter did not stop it from pumping up massively from 3 cents just about to 22 cents. So actually, I believe a bigger percentage change than what Sundial went through. So Sundial was at 83 up to $4. So what was that? We got to get it right here. So it was up 363%. MJNA, granted smaller market cap, over-the-counter stock was up. Let's see right here. It was up 700%. So even if it got delisted, I would not be the most worried about, the potential catalysts that we've got going forward for it, though I don't think we're going to see a delisting. So still very bullish on Sundial, right? Over the long term. I think, we're seeing it with some big companies too. Like we were just looking at Hood. Look at this thing. It's the same story. They're both just getting pushed down to oblivion. So, when this market starts making sense, I think people are going to be very green. BB says, go long Sundial. Yeah, I'm very long on Sundial. I've even sold some 50-cent puts. I'll pull this up. I've sold some of these puts. So for January 2023, let's see. They haven't really changed much in value, right? But over the course of the next year, as long as Sundial is above 50 cents, I'll be collecting that whole thing as premium right there, the 19 to 20 cents per share. So Gene Rogers says, Rob, what do you think of CGC Canopy Growth? So I haven't kept up with Canopy Growth as closely, right? But I do hold Canopy Growth, right? I bought into a ton of these cannabis stocks right before a massive pump that they went through, right? Basically, right before, let me pull out the 2-year chart. I bought into a bunch of them right around here, right before the elections, I believe. So bought in at the right time. Now some of them are down. Sundial is still actually green. If you look at the 2-year, I'll pull up the 2-year on Sundial. The 2-year on Sundial, bought in at 19 cents right there. It was my first buy. I bought, I think, 10,000 shares right there. So it was a great buy. And, we're still green on that. So I'm happy to see it. I'll be green all the way down to 19 cents, and I'll still be buying below that. Hopefully, Sundial won't get down that low, though. I think we've just been pushed down with all of these stocks past the point that makes sense. I've never... the last time that I can remember, actually, that we saw this much fear in the market for no reason was, let's see if we can find it on a chart. I don't even know if we're going to be able to find it on a chart. Let's pull up the 3-year week. I think it might have been here, and it was the same thing almost, right? The Fed was raising rates, and people got worried about it. We went through a big dip towards the end of the year, and I remember... Man, I was red on some positions, but boy, was it ever the best buying opportunity because look, we just kept moving up and up and up. Granted, we got the pandemic crash right here, moved us slightly lower, but there was real reason to be afraid then, right? At the beginning of 2020, everyone was very scared. A lot of people, at least. I wasn't too worried about the actual, effects of the disease, but I was worried about the effects on the stock market and the economy because of all the lockdowns. So there really was reason to be afraid, right? When the economy was shutting down, that's the kind of stuff that we've not really seen. And Zach says there's plenty of reason. There really is. There really are a bunch of reasons, honestly, to be afraid of the overall economy. But for the stock market, I think that, part of why we should be afraid is because there's just so much cash. And that's actually a good thing for stock prices, right? There's so much cash that if we were to see a big disaster, the kind that I might think is possible, currency crisis, I think stock prices would actually be going up because people would just be dumping their cash, trying to buy anything instead of holding the cash. Now, this whole country, for a while, for many, many years, has looked like a house of cards, right? You're looking at the national debt, and it just keeps going up, right? It seems like there's no end in sight. There seems to be no promise of ever lowering the national debt. It seems like just this perpetual thing where we borrow and borrow and borrow, and there's no end in sight, right? I can't imagine a world where what would the United States have to do to get to a point where it is no longer borrowing money and it's actually collecting enough in tax revenue to start paying off the debt? I just can't imagine it, right? I mean, they'd have to end so many social programs and whatnot that I don't think people would go for it. But that whole national debt thing, that could be a little bit of an issue. But overall, what I'm more worried about is this, right? I'm more worried about people losing faith in the dollar, right? People worried that, the dollar, they're just going to keep printing it, right? The United States is just going to keep printing it, and maybe people stop sending us goods because of that, right? Maybe they stop accepting trade from us because who wants it, right? All we do is print money and use it to buy stuff, and it costs us nothing to print. I mean, it costs us the paper we print it on, and then we buy real things with it. And I'm worried about countries like China not sending us stuff anymore. So that's one of my fears in the market, right? And that would have a fundamental impact on the stock market, right? The stock market could do poorly because of that. Obviously, any wars that we might see could have a negative impact on that kind of stuff, right? The stock market could fall if this whole Russia situation escalates, or if we get into a bit of a tangle with China. It could be bad for the stock market. But I am very worried that, we could see a bit of a currency crisis, right? Now that we're seeing inflation really move up in a big way, it depends on if people keep their heads or not, right? If everyone just keeps going on as is, then we won't see it. If people don't decide to escape cash and just trade cash for anything, that's really what causes these kinds of situations where you get massive inflation. It's when people are just trying to get rid of cash no matter the cost, right? And in that situation, you'd actually see a very well-performing stock market probably, because people would be looking to buy stocks. They'd be wanting to hold businesses instead of cash, right? Because the cash is trash at that point. It's worthless. The underlying companies, they still have real assets under their control. And although those real assets, they wouldn't be producing as much because they're in a country that's fallen to calamity, there'd still be some value in them, right? More so than the cash, at least. So all in all, I'm not too worried about the stock market tanking. I think that there's enough cash in the system to keep this thing propped up. It could fall, right? But it would only fall because people let it fall. It's not like there's cash shortage. It's not like there's no cash in the system that people can't be buying stuff up with. It's just because, people are trying to make a trade and trying to buy it a little bit cheaper because there's so much cash in the system, right? We went from $4 trillion in January to $20 trillion in October of the next year. There's quite a bit of cash. So I agree, Zach. There are some reasons to be worried. But, man, the stock market, I'll try to pull up, let me see if I can pull up a stock market chart of countries that have experienced hyperinflation. Let's see. No, I don't want to download something. No. All right, let's see if we can find this. Okay. Now look at this, Venezuela. I know everybody probably knows what's going on in Venezuela. Big inflation, and I believe. Look at this. Here's a chart of the Venezuelan stocks. Their stock exchange. So we'll zoom in a little bit. It looks like, once people started worrying about inflation, boom. You saw the gains from before 2014 to 2013 to around 2016 were pretty, what you might expect to see in the stock market. Then you start seeing some inflation and boom, they really shot up. So, I'd rather hold, anything other than cash. Although I've got some cash just in case, because in this crazy world, you never know what's going on, right? You never know if, for whatever reason, maybe someone hoarded all the cash and burnt it all, and now there's no cash left. You never know. I doubt that would ever happen, but you never know what's going on, right? Maybe for whatever reason, stocks might fall more, and it might be good to have some cash. Maybe home prices fall, maybe gold falls, and there are buying opportunities out there. And cash is what we use at this time to make those transactions, right? So it is useful to have some cash, I will admit. I keep some cash on hand just in case. It's also, what we use for our daily transactions. So it's useful to have day to day, if you're going to the store, you want some cash. And it's honestly nice to see a little bit of stability in the bank account because despite, what we say on the channel and whatnot, cash has fallen in value, if you believe the CPI, by about 7% over the past year. And that is, pretty significant. It's probably a little bit more than that in real terms, right, in terms of what we're actually losing buying power-wise. But at the same time, the stock market, over the course of less than a month, can fall 12.5%, and that's the safe S&P. So, there are risks. There are risks to everything, right? Nothing is guaranteed. Nothing's completely safe. But you got to do your best to figure out what you think will give you the best chance of success and to diversify yourself to the extent that you'll be in a good situation regardless of what's going on in the overall economy, right? Because you can position yourself in a way where, eventually you don't have to worry about things. And I think that's a goal that everyone should potentially be working towards, right? If you really love your job and whatnot and you want to keep going at it your whole life, then that's good and you can. But there's no reason not to also build up a store of wealth that you could fall back on if times ever get tough, if anything ever happens to your job or your health. That's one of the reasons why I really, really love investing and think that a lot of people should probably do it to some extent. Not financial advice, but Zach says, I live in Florida. You can barely find a house to buy, and there is a year-long waiting list of buyers. Yeah, I believe it. I believe it. Let's see if we can pull up a housing prices chart. Let's see if we can pull this up. So, here we go. So, yeah, home prices. Home prices have certainly been going up, right? This doesn't even account for the most recent year, 2021. But you can see the CPI and housing prices. So they went way up right before 2008, and since then they've been shooting up over the past couple of years. So housing prices, they've certainly gotten quite expensive. But I believe that we're also missing some of the most important numbers on that chart. So hold on. Let's try to find a better one. Let's try to find 2021 chart. Let's see if we can do that. So maybe this will do it. No. Let's see if we can find this. So, St. Louis Fed. All right, here we go. This is what we want. Median sales price of houses sold in the United States. So you can see we got the little pandemic recession line right here. And post that, we moved up dramatically. So from an average of 322,000 to 411,000 in quarter 3 of 2021. So home prices have gone up pretty significantly. If you look at the long term, you can see it's a very sharp increase in home prices. And once again, a lot of it's the dollar, right? They printed so much money. It's not just everyday people buying these houses. A lot of big institutions are buying up houses too, right? They got to park the cash somewhere, and they want this to be a nation of renters, right? They'd rather everyone pay them rent than own their own houses. And that makes sense, right? If you could do it, I'm sure a lot of us would prefer to own most of the homes in the country. If the government was handing us all kinds of cash, we'd be buying up houses too. If the government was handing me hundreds of thousands, sure, I'd put some of it in the stock market, and we saw that happen. We saw stocks go up. We saw home prices go up. We'll pull up the gold chart. We even saw gold go up, right? So gold, though it hasn't been too kind over the course of 2021, did go up pretty significantly from where it was right before the pandemic. If we look at the chart right here, it was about, right before the pandemic, it was around 149. So from its pits to its heights, it was up 29%, and it's up still 10% now, currently where it is compared to where it was before. So, I mean, even stuff like gold has gone up. Everything pretty much has become more expensive in terms of dollars. And I'm really surprised to see that the dollar is performing as well as it is right now, and especially during the last half of 2021, when it seems like people were worried about at least a lot of people were worried about inflation, but the overall narrative from the Fed was, oh, inflation is nothing, it's transitory. It's a good thing for the economy that we're seeing some of this inflation. So, it really is shocking to see the dollar continue to rise this much. And Kitchener Leslie says, if you gave Rob $1 million, he still wouldn't buy DWAC. I'd still be selling those puts on it. I think that's just a much safer way, right? If you look at this, you can still collect about a 50% profit, it looks like, from, or you can still double your money just about. I believe it's still, or it's close. You're not quite doubling it anymore, but you're getting pretty close to doubling it. Maybe you could if you sold if you sold it for $30 a share, then maybe you could do pretty good. But you could still. I mean, selling these puts make quite a bit, I think. I just like the puts. I mean, they're just. It looks like there's just so much risk involved with DWAC, at least as viewed by the institution. So much volatility with it that it makes the puts quite expensive. It makes the calls very expensive too. To be fair, right? But I think that the puts are a bit of a better bet if you're selling them, because I think we're probably going up, DWAC wise, right? But I just like those puts, man. So, and James Wood says, two stocks as they both go lower on the beatdown, get more shares. And he says MJNA, which will pull up, which I like MJNA. It's gotten pretty darn cheap. It's been taken down with the market, but I think that we could also see a big pump in it. I think I've got 100,000 shares of MJNA. It's a cheap one, right? It's a 1.6 cent stock at the moment. So it's a cheap one. But I've got around 100,000 shares of that just to play with, right? It's an over-the-counter stock, so you probably can't trade it on your brokerage unless you're using TD Ameritrade or something like that. And CFVIW. So we'll pull up the warrants. Yeah. So the warrants on CFVI have been hurt a little bit over the past week, and hopefully they'll continue to rise, right? But what I really want DWAC and CFVI to become TMTG, and I forget what Rumble's ticker symbol is going to be. Let me try to pull this up. Probably RMBL or something like that. Yeah, RMBL. That's going to be a good one. I really want them to change their ticker symbols. I want them to go through with the mergers and actually go over, and we can see what price action we get with the real companies, right? With the more recognizable ticker symbols, and potentially we can get some more options, right? Because if you look at this, theoretically, the price of a SPAC should not really drop that far below $10. But I would like to see some more options, is what I'm saying, right? I'd like to see a little bit more volatility on the options, and some more implied volatility, right? Raising their prices, so that I could play some of those. But we'll see when it happens. In the meantime, we'll pull up the DWAC chart and see what we've got. It looks like it hasn't changed much from when the market opened. It's pretty much it's just it fell initially for the first couple of minutes, and it's just sat there ever since, right? It tried to rise a little bit. And we'll see if the market overall is performing well. So basically just follow the market, right? Pretty much everything, it looks like, just dipped initially and is stagnant. And so Max Pierce says, Rob, if Centro gets delisted from dropping under $1, how long till it would be delisted? So it's 180 days from when it drops below $1. Or I believe it's 180 days from when it's been trading under $1 for 10 days, I think. So I don't think they're going below $1, but look at this. It's just bearish day after bearish day. Boy, did they ever choose the worst time to go public, right before the market tanks. Really sad stuff to see, honestly. But man, below $1, they'd have to fall 33% more. Maybe maybe, but I hope not. I hope not. But yeah, I think that over the course of the 180-day period they'd have, I would think that they could get well above $1 by then, right? 180 days is what, half a year? So I'm not too worried. I'm not too worried about delisting for Sen. And Zach Taylor says, Rumble is a creeper. I have hundreds of thousands of views on my videos from a week ago. Wow. Wow. That is very cool, man. That's awesome. And PhD Dragon says, wow, AMC, heartbreaking. Let's take a peek. AMC, yeah, AMC is tanking, right? The hedge funds, they're really sticking it to us right now. They're showing us who's boss, right? That's exactly what they wanted to do the whole time, right? They did not like it when retail was making them afraid, right? They didn't like sweating it when AMC was at $72 per share. And, now, understandably, retail doesn't like it when AMC's at $14 per share. So the tables have kind of turned in this market, right? The smaller market cap stocks will pull it up. Looks like the Russell's is making new lows today. So we really are, in a period where people are very fearful. And those really are the buying opportunities, right? It's the toughest time to buy, but it's also potentially one of the better buying times, right? Because that's when people are pricing these things at valuations that give you the highest expected returns for the future, right? The highest potential returns that you could get because there's all this fear, right? There's more risk, but there's also more potential return. And if you're going to get into the market, you want to do it when it's down, right? You don't want to do it when it's up because you never know when it's going to move down, and then you're going to be down on your money. If you buy in when it's down, then sure, it can continue going down for a bit. But typically, these things, at least recently, haven't lasted that long, right? Even when there was real, world, what people were calling world-ending stuff going on, we recovered pretty quickly. And granted, it was very different from now, right? The Fed was very money printing friendly, and now they're changing their tune a little bit. So we'll see what happens. We'll see if this whole thing is just propped up by the Fed's spending. My hope is that it's not. My hope is that there's enough cash in the system to keep us moving on an upwards trajectory. But you never know. You never know. And we will pull out the market map real quick right here. So market map, not looking too kind. Basically, we've got three significant pieces of green right here. We've got Apple, MasterCard, and Visa. And those are the three green ones. And everything else pretty much is red. I mean, there are a couple of flecks of green here and there. But Apple, they had their good earnings call, right? They're up. MasterCard and Visa, whatever, right? They're credit cards. Something must have happened with credit cards, and they must be moving up. But everything else is red today. So who knows? Who knows how much longer we might be in this bear market? Hopefully not too long. And if we'll make new lows is yet to be seen, right? We've gotten down to 420 on the SPY before, bouncing back up. And I will point out, it seems, unfortunately, quite potentially possible, with how long we've stuck close to these low levels, that we might make a breakthrough to the downside. We certainly could. We certainly could. But there's also potential for us to make a breakthrough to the upside. We'll see what happens, though. I know there's a lot of fear out there, right? But overall, I'm bullish on stocks over the long term, right? So I'm still buying. I'm not too worried about it. I understand that these price fluctuations are going to happen, and the important thing is, and no one should be doing this, the important thing is that you don't put in money that you can't afford to lose, right? If you're going to need that cash at some point in the next couple of years, you really shouldn't. I mean, not financial advice, but in my opinion, you shouldn't be putting it into the markets or into cryptos or into anything, super risky. Obviously, there's the risk that the cash will lose value to inflation and whatnot, and we've seen a lot of that in the far out past, right? In the 70s and 80s, we've seen a lot of that. But hopefully we're not going to go into a period like that anytime soon. It's possible, and maybe even likely that we will, but we'll see what happens. And BB says, selling puts soon to be the best seller first quarter and beyond. Yeah, so I think that selling puts in an environment like this can make a lot of sense, right? Once again, using money that you can afford to lose, selling puts can make a lot of sense. So we'll pull up just for fun. We'll pull up AMC's puts, right? So say you want to buy AMC stock, right? You like AMC, and you see that it's been falling, and you want to get into it. Maybe you look out and you say, hey. I'm bullish on AMC at $14, right? You see it's 13.55, and you want to get in to the stock. So you pull out a put for, a couple of months out, let's say May 20th of this year, and you might sell a $13 put, and you'd collect that $3 premium for doing so. Now, what that essentially means is that if AMC falls below $13, which it's looking like it could, right? We're down 90 cents today. We only have to fall 50 more to get below 13. Seems likely that we could do it. And by May 20th, if we'll actually stay that low until after May 20th, who knows? But one way or another, you either get to keep this $3.50 premium just about all to yourself for selling those puts, or you get to buy the stock for below $10 essentially, because you're collecting $3.50. So you'd essentially be buying AMC for $9.50. So I think that there are ways to be making some beneficial bets for yourself in this market, right? As opposed to just buying shares. It might make sense to look at options, because options, the pricing's on them during these times of extreme volatility. I mean, we'll look at the VIX. The VIX is essentially measuring options pricing, right? As the volatility index goes up, that's essentially measuring the implied volatility in the markets and people's fear, using that to gauge fear, essentially, right? So we're seeing the VIX go up, and thus option prices are going up, right? Because of implied volatility. Now, I'll pull up the full screen chart so we can see some of these implied volatility levels in the SPY. If we pull out the past year, you can see there are some periods where you reach very high, this purple line right here, very high implied volatility levels. We're at currently 28%. Now, a couple of weeks ago, we were at 17%. That is a factor in options prices when you look at implied volatility. So there's real potential that, over the next couple of weeks, if the market flattens out, if it starts moving back up a little bit, if we start to get some green, if Powell says something to calm people's fears, we could see this implied volatility line at the bottom, which I'll make a little bit bigger. We could see this falling down, which also means option prices should be falling down as well, and that options should be, cheaper, right? So if you're selling options now, cash secured puts or whatever it is, then there is the potential to maybe make some money with it. Now, obviously, you could lose quite a bit if the market continues to move down, but if they're cash secured puts, you're essentially just buying the stock for cheaper than you would be today, right? So if you're happy with the prices today, maybe the options make sense. But that's just my opinion on it. And it is 10 o'clock, guys. So we will be ending the stream today. We looked at these college debt numbers, and one of the milestones that people put off because of their student loan debt was vacation, right? And I think that, the touristy vacations don't make much sense, but I am going on a little vacation this weekend, so I've got some stuff to take care of beforehand, just to visit a friend, nothing crazy, but I will be out of town, so I won't be paying too much attention to the markets, and I think that's a good thing to clear your head every now and then. So, guys, hopefully you do the same. Hopefully you have a great weekend. Don't think about the red markets too much, right? It's never fun thinking about the red markets. It's always better, when the markets are green, the grass is always greener. When the markets are green too. So don't think too much about the red markets. Try not to let it get to you over the weekend. Enjoy yourself. Have a great day, guys. We'll see you in the stream on Monday. We'll be back, hopefully, to a much more kind economic environment, but you never know. So other than that, guys, have a great day.